Hey everyone, welcome back to another video. In this video, I'm going to be looking into the recent third quarter earnings report that came out for Lockheed Martin. And we'll see when we look into this video that some of the financial statements and the earnings growth that has happened for Lockheed Martin in the third quarter and in the fiscal year of 2022 has been extremely impressive. And we're also going to see that the future outlook for the company also looks to be very optimistic. So we're just going to see based on their financial statements, as well as by using a discounted cash flow model to figure out the intrinsic value per share of Lockheed Martin stock. We're going to see if this company presents a really good buying opportunity now or at any point in the future to get a really good return from a value investing perspective. And so we can see that over the last year, in the same year that the S&P 500 has fallen 14%, Lockheed Martin is up almost 50%. So they're completely dominating the market over the last year. And even over the last 5 years, Lockheed is up 57% and the S&P 500 is up 51%. So Lockheed Martin is essentially beating out the rest of the market through and through on the 5-year chart, the 1-year chart, and the monthly chart, as we can see right here, and the weekly chart. So hopefully they're presenting a good buying opportunity, but we'll find out in this video. And so in this article right here that I found, it basically touches on some of the key points that came out for Lockheed Martin in their third quarter earnings release. And their stock price obviously shot up a lot when they announced their earnings, as we can see right here from the last week. And so these 3 points that they make right here were pretty interesting to me. They talk about how in the third quarter, they talked about how they're increasing their repurchase authority and boosting their dividends. So they're obviously prioritizing returning value to their shareholders. And then secondly, they said, funny enough, that right now the company is in a period of transition and their growth is not really expected to accelerate until 2024. And I thought that was pretty interesting because if you look at their stock price, it's up 50% over the last year and 57% over the last 5 years, beating out the rest of the market. And this right here is what they consider to be a period of transition. So I'm genuinely curious to see if this is how much the stock price and the company, as we'll see from their financial statements, is growing during a period of transition. I'm honestly curious to know how much they'll be growing in a period where their growth is accelerating. And then lastly, in the third point right here, they talk about how, as they touched on in the first point, the company is, in the long term, definitely prioritizing aggressively returning cash back to their shareholders in the way of share repurchases and cash dividends. And so right here, there are a few points that they touch on. Mainly right here is the one that I want to see where they said the world's largest defense contractor, that's Lockheed Martin, has already reduced their share count by 17% over the past decade through share buybacks. So that might be one of the reasons why their stock price has shot up so much, because they're consistently reducing the amount of shares outstanding on their company. And they point out a couple of the financial metrics from their financial statements here, but I'll get into that a little bit later in the video. And lastly, right here, they talk about how the CEO in their earnings release touched on the fact that in the third quarter, they had really strong free cash flow and operating margins that positioned their business well to achieve their full year commitments for the fiscal year of 2022. And so now I want to look into their financial statements, and this right here is their income statement for the third quarter of 2022 compared to the third quarter of 2021. And we can see that their total sales are up about 3% from $16 billion in the third quarter of 2021 year over year to $16.5 billion in the third quarter of 2022. And even though the revenue is only up 3%, if we look at their net earnings have increased from $614 million to $1.7 billion. So that's an increase in their net income of about 189% in the same period that their revenues have only increased by 3%. So what that tells us obviously is that their cost of revenues have declined pretty significantly. And I was able to identify that the main reason for that was because of this pension expense that they incurred in the third quarter of 2021 for about $1.5 billion, which they obviously didn't incur in the third quarter of 2022. And that was one of the main reasons that contributed to this extraordinarily large increase in their bottom line here. And then on top of that, if we look at their EPS, their earnings per share, their diluted earnings per share, we can see that it increased from about $2.21 per share to $6.71 per share. So that's an increase of about 203% over the same period that their net earnings increased 189% and their revenue increased 3%. And that mainly tells us that, obviously, as we saw from the article that we just reviewed, Lockheed Martin is repurchasing a ton of shares, and if they're reducing their shares outstanding and their earnings are increasing, then obviously when you figure out their earnings per share, which is their net earnings divided by the amount of shares outstanding, if the shares outstanding number is decreasing, then their earnings per share is going to be increasing even faster than their net income is increasing, and that's what happened right there. And so now if I scroll down to page 5, we get a better look at their balance sheet, their statement of financial position. They're comparing their third quarter 2022 balance sheet to their December 31st, 2021 balance sheet. And we can see that their total assets during this period have increased from about $50.8 billion to $52 billion. The majority of their business is financed by liabilities as opposed to equity. They have $40 billion of liabilities and $11.9 billion, almost $12 billion worth of total stockholders' equity as of the third quarter of 2022. And then lastly, right here, we see their cash flow statement. And this is where we'll actually be able to see the metrics for their free cash flow, as well as how much cash they're returning back to their shareholders. And we can see right here that they're comparing their 9 months ended for 2022 and 2021. And so we can see they had net cash provided from operating activities of about $5.8 billion compared to $4.9 billion 1 year earlier. And of this $5.8 billion, I know it doesn't say it here because they're not reporting it, but they reported in another area of their reports that the operating cash flows for the third quarter of 2022 came out to be about $3.1 billion, which is up from $1.9 billion in the third quarter of 2021. So of this $5.8 billion, about $3.1 billion of it came from the third quarter. And then their free cash flow for the third quarter, the $3.1 billion minus the amount of capital expenditures that they incurred in the third quarter of 2021, came out to be about $2.7 billion, up from $1.6 billion in the previous year. And lastly, if we look into their financing activities right here, we can see the the repurchases of common stock and the dividends paid. In the first 9 months of the fiscal year 2022, they've repurchased about $3.6 billion worth of common stock, and they've paid out back to shareholders about $2.25 billion worth of dividends. So that is a ton of value back to their shareholders, coming out to be about $5.8 billion or almost $6 billion worth of cash that they've just distributed back to their shareholders. Reminder, they're calling this a period of transition. So this isn't even the period that they're considering accelerated growth for their company. And interestingly enough, of this, how much is it? $3.6 billion of repurchased common stock in 2022. About $1.4 billion worth of that came in the third quarter of 2022. And then of the $2.25 billion worth of dividends paid out in 2022, about $739 million worth of that came in the third quarter. And as I touched on slightly in the article, they increased their authorized share repurchases to about $14 billion through to the next 3 years. So basically they're planning on potentially repurchasing at this point, based on what their board of directors have decided on doing. They've potentially decided to repurchase about $14 billion added up over the course of the next 3 years, which is even more value returned to their shareholders, which would obviously contribute to increasing the share price for their company even more. And then on top of that, they also increased their quarterly dividend rate by 7% to $3 per share. And in this industry, the one that Lockheed Martin is competing in, Lockheed Martin actually has the highest dividend payout in comparison to all of their competitors. So not only is their stock price beating out the rest of the market, but they're also returning more value to their shareholders than the rest of the companies in this industry. And so now I want to look at the discounted cash flow model to try to see what the intrinsic value per share of Lockheed Martin might be. I got these estimates from Yahoo Finance. Basically, they're estimating that Lockheed Martin might grow at about 7.85% compounded annually over the next 5 years. So for the next 5 years after that, I was conservative and I cut that value in half to 3%. They had about $7.7 billion worth of free cash flow for the year 2021. They currently have a net debt position on their balance sheet of about $9 billion, and they have 262 million shares outstanding. And so with these metrics in mind, we can see the intrinsic value per share is estimated to be about $373 per share, with a 50% margin of safety of $186 per share. So Ideally, based on the current cash flow metrics for the business, if you wanted to get at least a 10% return on your investment per year, you would ideally want to buy into the company at a share price of around $370 per share. And so compared to their current share price, it looks like based on these Yahoo Finance estimates, Lockheed Martin might actually be overpriced at the moment, trading at $484 per share compared to Yahoo Finance's intrinsic value estimate of about $373 per share. But as always, these models suffer from the consequences of garbage in, garbage out metrics, which means basically whatever you put into the model is what you'll get out of it. So I definitely encourage anyone watching this video to do their own due diligence and use their own growth rates that they calculate for the growth rate for any company that they're valuing. But this is just the one that I came up with based on the unbiased results from Yahoo Finance. So I don't want to put my own input into it. I prefer to just get the information that's made publicly available when I make these videos. And so on the right-hand side here, just to end off the video, I actually did a competitor analysis to see how Lockheed Martin ranks up against the other competitors in their industry, specifically Boeing and General Electric. And we can see that in comparison, Lockheed Martin across the board is blowing out their competition in terms of financial ratios. They don't have the highest gross profit margin. That goes to General Electric, which they have a 27% gross profit margin compared to Lockheed Martin's 15.8%. But in comparison, Lockheed Martin is the only company that's profitable. And so as a result of that, they're the only company with positive net profit margins and return on asset ratios. They have a net profit margin of about 9%, and then they have a return on asset ratio of about 12.43%. So obviously it's important for a company to be profitable, and it looks like Lockheed Martin is definitely beating out the rest of the competition in their industry in that regard. So it's also pretty impressive just to think about how the fact that even though Lockheed Martin has the highest net profit margin and the highest return on assets in comparison to their competitors, they're also beating out their competitors in terms of dividend payout, as we touched on earlier in the video. They have the industry-leading dividend. So they're returning more value back to their shareholders while simultaneously producing more earned capital than the rest of their competitors. And on top of that, their share price has beaten out the rest of the market over the last 5 years and the last year, while the S&P 500 has fallen about 14%. So Lockheed Martin is definitely a really big powerhouse of an investment in the stock market right now. They have great earnings growth, strong financial statements. The only downside I would have to point out is that their intrinsic value per share is valued at less than their current share price. But I'm not too sure if that metric will really hold up. Obviously, this is a period of transition for them, as their management has pointed out. So maybe in the periods to come, when the company is accelerating their growth in 2024 and beyond, maybe this current share price could potentially present a good buying opportunity. But I'm not too sure. I'd love to know what everyone watching this video thinks about Lockheed Martin. Is it a good investment or not right now? Let me know in the comment section down below if you think this is a strong buying opportunity, or if you're just going to keep your eye on it and see where it goes from here. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.